Wednesday, September 25th. We just basically swept liquidity on that swing low, but we did respect the fair value gap that it made. Okay, so that was your manipulation yesterday, and it happened at 1400 hours. All right, so this is why we talk about like do not trade before Powell speaks. Can everybody see this? At least.
Yeah, right here. The sweep.
The sweep down, but it still respected the fair value gap because we didn't close below it. Okay, and it swept all those swing lows that were respecting the fair value gap. So this fair value gap here held. All right, so we're gonna see today, but again, today might be another, hanger on kind of day. Now, if you go to the daily,
That's this.
if you go to the daily, we're stuck in a consolidation zone right now. Okay, and it's either going to be one or two things. It's either just going to shoot us straight up because it is respecting the fair value gap on top, the bearish fair value gap that it happened on, I'll tell you the day too.
Right here.
It happened on 17th of July. All right. We are in a bullish format, however. Okay, but a bullish format on the daily, but on the bigger picture, we are on the bearish format because we're just hitting the a bearish fair value gap. So two things are about to happen here. Okay, we're either going to explode through and we're going to close above this fair value gap. Okay, or we're going to come down to a level of like 19,300. Okay, and that can happen overnight because if you can see right now, from where we are all the way to about 19,500, we have no fair value gaps. Okay, and the more I'm learning this, the more I'm going with like, like I'm because you can't possibly follow every single thing out there. You can't possibly follow every order block, every mitigation block, every breaker block. Breaker blocks are good when you have a change in the state of delivery, but like, however, I can't follow every single thing. So what has worked for me very good, and essentially right now I'm passing 250s at about 85% success rate. Just price action followed with market structure shift and a fair value gap. Okay. So once I have that, I'm more than confident about, getting into a trade. You know.
Oh,
So on the daily, sorry, what'd you say?
I just said yeah.
You know. So on the daily, I am leaning towards that. Um, on the weekly is actually a little bit more confusing than anything else. Uh, because we did have a market structure shift on the bearish side. Okay, and right now we are at a very fair value gap on the weekly. Okay, so we hit internal lows or external to internal. So we hit the internal. The internal happened on Monday, August the 5th. We saw liquidity at the bottom here. We went back up, coming down, went back up. We're at a fair value gap right now. So if we do respect it, also if you see it, not only we're at a fair value gap, but we're also at the breaker block. Okay, if you want to get both confluences in place. Okay. So now we're going to see because we're either going to have a change of structure and the market is just going to explode up, or we're going to have a respecting thing and we're going to come to 1999, which is a fair value gap on the weekly. Okay, and then once we do that, then let's see if we can go and break down lower. Okay, and we have an 18.5 area here that we can gotta keep in mind type of thing.
Yep.
Okay, and on the monthly, if you see, on the monthly we're pretty much dead. Like, yeah, a lot of wicks up and down, but we haven't really done anything with it. We've had, so you could tell that this is essentially is an election year because we've had July, August, September. If you see where they opened and where they closed, then you're gonna be like, okay, I get it. So July, August, September type of thing, it's your three summer months. Okay, so it's a shit show that happens in the summer usually. Okay, and essentially go back last year, July, August, September. You're gonna see the same thing. Okay, and this thing has a weird way of repeating itself because if you go again a year before then on 2022, you go to July, August, September. It's still the same cluster. All right. So these are called seasonal shifts. This this August was a little bit more volatile in terms of hunting for liquidity. Okay, but then again, if you go back 4 years ago, which I can't even do on my fucking with my trading view,
Yeah, I don't know if
but
I
if you go
can.
back, but if you go back 4 years ago, you're probably gonna find out that every election year, like it's still the same seasonal tendency. However, you're gonna find that they're weakening a lot more, okay? Because you generate a lot more news. There's a lot more wow factors. There's a lot more he said, she said, et cetera, et cetera, et cetera. And this is what market makers is doing to generate their own internal liquidity. Okay, like compare it to last year, it's essentially the same thing. Like between top and bottom, we had last year the top was 16.8, and then the bottom on September was 15.5 thousand points.
Mhm.
Um, Bottom here was 19.6. Top here was 20,400. 900 points, you know? You were saying 900 points is a big thing. Yeah, it is. But like in the grand scheme of things, when the rest of the month, when the before you get to that thing, you're starting at 79 and you're ending at 20,000. That's 3,000 points or 2,000 points, right? So you're actually seeing trends on the rest of the months. You know, whether that be downtrends or uptrends, it doesn't really matter, but you're seeing trends. Okay, so just keep that in mind. Um, and then you should see October usually will start uh, to either be a continuation of September or we'll start to actually get a leg on and move into a rhythm. Okay, my guess would be up just because again we have an election year, so you know usually the market follows that up until November. We're gonna keep on going up. Usually the market is usually controlled by whoever is in power at the moment. So by doing that, there and it doesn't matter which one is which, is who controls quote unquote the market maker. All right. So we're gonna pump it up. Uh, Say the economy is doing well, blah blah blah, all that shit doesn't really interest me. But I believe that we're probably gonna touch 21,200 by the time this is said and done. All right. Anyways, on the 1 hour, if you go back to the 1 hour chart, we're pretty much, like I said, flat. Okay. We do have a fair value gap over here that was done on September 30th at about 3 o'clock. It's a bullish fair value gap. And my only thing about this is that it has been hit quite a few times already. Okay. So I wouldn't be surprised if we go through it. And if we do respect it again and then get up and go again up, then I'll be looking at my first TP will be 20,300 and then it would be 20,332. Okay. So the current one that's printing right now, we're at 20,200. If it goes down to this fair value gap at 20,223, so about 20, 30 points down. If we do close below it, then I'll be looking for shorts. If we respect it and we change market structure shift again on a lower time frame, then I'll be targeting the higher ones. Make sense?
Yeah.
All right, guys.
Sweet. Thanks.
That's it for me. You guys enjoy. Stay safe. Make some money.